All right, welcome everybody. Doug here with the LincolnList.com. Just going to take a few minutes today to educate you a little bit on the blow-off top and how you can utilize that into your trading. We're going to talk a little bit about how to recognize one, but again, more importantly, we're going to talk about how you can make some money with them. And for your example here today, we're going to use two charts. We're going to use DGLY, DGLY, which was a former breakout stock that had a blow-off top, which since has been sold off, and then one now that might offer you a play here in the near future, which is Lake, which I believe just now had its blow off top and might lead to a very similar chart. Now I say similar because there's no guarantees, of course, in trading. We know that already. And as chartists, if you trade like I do off of charts, that the names change, but most of the time the charts will conform. They'll stay in a certain kind of mode, right? That's how we make money. We trade the same patterns. We look for patterns. The stock tickers will change, but the patterns will relatively remain the same. So this might lead us to some clues on Lake. Not a guarantee, but maybe. So let's first talk a little bit about DGLY and understanding what a true blow-off top really is. And the easiest way to describe it, it's like a perfect storm. It's when a stock has, let's say, a legitimate breakout, or a stock breaks out, and maybe at one point there was a reason to purchase that, but then there comes a time where that stock really gets out of control to the upside, and you got all of these people who are just chasing it. They're just buying it. There comes a point where they're no longer really looking at fundamentals maybe for the company, or they're not really looking at the chart and using logic. All that is out the window, and euphoria is taken over and people are buying. The counter move to that, of course, is short selling. It's a viable strategy for most. That short selling is a very powerful strategy, and a stock that goes up a lot is going to be vulnerable to being shorted. And there comes a point where this perfect storm sort of matches, where the momentum is so strong, the shorts pile in, they get stopped out and have to buy it. It just creates this epic explosion in a stock. Now, the two stocks I have up here are traditionally low floaters or low volume stocks that sort of had no action prior to this, and they sort of just broke out off of news and catalysts, and they go nuts. And you're always going to see these stocks. It's going to be more prevalent in these lower floaters where the whole float can rotate in 3 or 4 times during the course of a day, versus maybe something like an Apple or a Tesla or a GoPro. Now, you did see somewhat like that on a GoPro. Not saying those stocks can't have blow-off tops, but you're always going to see more epic, nutty account blow-up kind of moves that you see in Lake and DGLY. So the first thing to kind of recognize this is there comes a point where the stock, as I said, they break out. If you kind of look at DGLY, we go back, there was some legitimate, and I say legitimate where there's good risk to reward or solid setup here on a high break of $9.30. And then once it kind of breaks that, it just gets out of control. It goes straight from 13, and eventually this thing just starts ripping people apart to the short side, and it explodes one day. It's just going up, 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 and then this one day it's just a literal 13 to 4. It gaps up and runs $13 to $14 straight to the upside. Goes straight from like a $4 stock to a $33 stock. I mean, just common sense alone would tell you that's a pretty significant move, no matter what the story is behind it. But if we just look at the chart, the key to the blow-off move is it's the candle right here at the very end of the cycle is usually the largest. It sort of looks like a ramp. It's like tick, 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 explosion. And this is the part where I said it becomes an emotional trade where people are no longer concerned. What they don't want to do is they don't want to miss out on the rally. The short sellers are saying this thing has to come down, and they're being stubborn, and they're doubling down and tripling down, and all this stuff just culminates and explodes the stock to the upside, and you get this epic range move. So if you look at DGLY, one of the keys is some of these moves were $3, $4, and all of a sudden you get one day $13. Now what happens here is it just kind of like explodes everybody out, and the following day you start to see a heavy retracement. What really created the move, most likely, was the short squeeze. Is that once you short the stock, for those who don't know much about short selling, when you get stopped out of your short, you're in essence buying the stock. You also have a lot of brokerage account buy-ins, so you might be short. When you short a stock, you don't necessarily get to keep it forever like you do a long. I mean, you're borrowing the stock, so your broker has the right to call you in and force you to buy into the stock. So that creates these moves. Once those short squeezes go to the wayside, it really takes away the momentum from that stock. You see, it immediately follows up. The next day, what happens is almost 100% of this move gets retraced. That lets you know that this most likely was not just euphoria to the upside with buyers, but most of this was probably the float rotation and stopping out the shorts or them being called in and just giving up on the trade. That created that little extra buying boost. Now, what this did for DGLY is it really took the momentum out of the stock, and they don't just necessarily crash down to the ground unless they're like OTC pump and dumps, but these little micros like this, they'll fight around a little bit. You see, it takes a good 6 or 7 days, and then eventually, it have some bounces. Some PRs will come out there. Maybe the companies will try to defend themselves. Momentum traders might try to get back on top of it, seeking alpha articles. So it's not uncommon for them to bounce. But what really the key to this is this particular move marked the end of DGLY. Now, whether it bounces back up, retests high, that doesn't matter. What mattered is that was like the treasure map, the X, that was it right there, ground zero, game over for DGLY. Since that point, it's just a day-by-day process. Each bounce gets sold off. Each PR is more and more worthless. I often refer to them as the stock that cried wolf. Nobody cares anymore, and it just kind of falls down. You can see even today it bounced up $2 and sold all of that. So let's move to Lake, because this is a hot stock right now, and there might be a moment where this has passed, but there's going to be stocks like this in the future. If we look at yesterday, you really saw the same kind of move. You had a good breakout, just like DGLY offered a good flag breakout, good opportunity. You saw the same thing with Lake. It had a really nice flag here. If I kind of open this chart up a little bit more for you to see it, there was a really nice flag set up and a really solid breakout here, triple top breakout at 995, a legit buying opportunity. But just as DGLY did, there came a point where you had that perfect storm where buyers didn't want to miss out on the rally, and they are chasing it. Shorters are jumping in on it, and they're getting squeezed on. Same kind of low float stock, same kind of rotation float, I should say. And you see this epic move. And again, the biggest move in the cycle happened yesterday, going from 20 to pretty much 20 to 30, really squeezing everybody out late in the day. And just as DGLY did, rather than continue to go up, you followed that day up, there you go, with relatively a 100% retracement of that green candle. So if you look at DGLY right here, if we match them up, they're not going to be perfect, but you can see a very, very similar situation here. Again, guys, this is how you make money. Is you can't just overthink this. Just look at the patterns. It will tell you. When you're looking at a chart, that's the beauty of it. It's clean and it's pure and it's sexy, because all known relative information about the chart, about the stock, the current price or whatever, is reflected in the chart. It is real time, and it's telling you what the market really thinks about that price. Now, you're going to have people come out and tell you, hey, this company makes X amount of dollars. This maybe Ebola's not going to go away. But, hey, a lot of that's already been priced into the move. And you can see here, if you just look at the two charts, they're eerily similar in their behavior. And today you got that 100% wipeout with Lake. Now, I'm sure it will bounce again. Maybe it does. But if it doesn't reattack that high real soon, if you don't start going back up into the 25s, you get back up into that area within a relatively short period of time, then this definitely would have signaled the blow off top. Nonetheless, even if it does come back up, because sometimes they will, the point that you need to understand about it is when you see this blow off top, first and foremost, if you're a rookie or a noob, no matter what's being said on social media or what's being pumped in the news, do not, under any circumstances, ever, whatsoever, ever nevers, write it down, you do not buy into the big blow off top. You just don't do it. Maybe there's going to be that 1 in a million stock that does, but the majority of the time you do that, you are going to hate yourself, and it's going to take you just a few moments, and you're not going to have an account anymore, because this is going to just destroy you. So don't do that. Same way with the shorters. A stock that goes up this much, you don't have to be the first person on the table. I mean, so you didn't get DGLY at 33 and cover at 27. You had months after that, literally since September all the way to today. Today we shorted this thing. You have so much time. It's up so far. You've got so much time to get in it when the Momo has really been sapped out, when you've really confirmed that that move is over with. You let it bounce a few times. It's not doing it. Now you're much more certain. And you see that this is just going to give you those opportunities. So for both sides of that trade, there's no need for you to be the hero here. Just first and foremost, rule one, just step aside. Let the thing go. and then wait for the move to kind of confirm itself. And I think today's red bar really confirms that this is the blow off top. The second, of course, would be I wouldn't be surprised to see this bounce a couple of bucks, maybe back up in here. Again, DGLY tried to re-attack here, bounced back up to 28, 29 a few times. But you can see each bounce got sold off. Each bounce was less. You'll see that weakness where it kind of just doesn't. Maybe Ebola dies out a little bit in the news, and it kind of just tapers off like DGLY did with body cameras, and then this thing would continue to go down, downward, very similar to what you've seen here with DGLY. Again, not saying that Lake is that case, but what we want to learn from that is that as soon as the following day comes and you see a really good red bar like this, that would be the time for you to short, is on that very first red day or on that very first hint of weakness after the blow off top. So, again, kind of monitor Lake over the next couple of weeks and see where it ends up and see how how close it does. You also have other stocks that have very similar moves, like for example a JRJC, which was close to DGLY. Didn't quite have the largest blow off top, but something very, very similar where you've got that parabolic late day, late in the cycle surge after the stock has already gone from 4 to 10. You got people still buying into it, and it explodes, and it kind of marks its downtrend as well. So you again, match these charts up with Lake and see how it kind of works out, see how that blow off top. But just kind of keep that in mind. It also happens for you intraday traders. I showed you some dailies, but a lot of these stocks, will break out in the middle of the day, and they'll go parabolic 1, 2, 3. The key is always that last bar. After 3 or 4 strong bars, if you get a fourth, or that's really, really big, or a fifth, you're really coming close to that blow off top, and it's best just to stay away from it in both directions. So anyway, I hope you learned a little bit about the blow off top. Might have confused you because sometimes I can be confusing. But look, if you need some help, there's tons of patterns out this like there every day. These are just 2 stocks, but there will be hundreds of them throughout your career as a trader, and it's important to look at these patterns and incorporate them with other training tactics or other great things like RSIs and other indicators to really maximize your performance. So if you need help, you always know how to get in touch with me. Visit thelincolnlist.com. Feel free to take a 14-day free trial to any one of our services. Thanks for watching this video. Take care of yourself and trade well.